Let's jump right into today's explainer because we are exposing a financial landmine hiding in plain sight. It's a health coverage product that looks exactly like a lifeline, but man, it might actually be a trap. If you've ever shopped for health insurance, you know how incredibly overwhelming that marketplace can be, right? Rising healthcare costs are this constant, crushing concern for pretty much everyone. So naturally, we all look for ways to save a few bucks on monthly premiums. But today, we're looking at some eye-opening source material from an industry veteran that exposes why a very specific, widely marketed type of coverage is something you need to be extremely careful with. So let's tackle this central question right off the bat. When you see those insanely cheap health coverage plans advertised online or on late-night TV, are you actually saving money? Or are you walking straight into a financial disaster? Look, with premiums going through the roof, the appeal of a heavily discounted plan is huge. I get it. But are you buying actual peace of mind or literally just a piece of paper? Insurance agents hear this all the time. People always want to know, hey, is this low-cost alternative a smart, frugal move? Well, as you'll see, buying into these specific plans without knowing what's under the hood is hands down one of the biggest financial risks you can take with your family's future. Which brings us to Section 1, the cheap insurance illusion. We're going to start by looking at exactly why these fixed indemnity plans are so incredibly tempting when healthcare costs are just a constant worry. There is a really stark contrast in the marketplace right now. On one hand, you have traditional comprehensive health insurance. This is the stuff that operates under frameworks like the Affordable Care Act or the ACA. It relies on the concept of risk pooling. So basically, the massive costs of severe medical emergencies get spread out across a huge population, protecting you, the individual, from total ruin. Plus, it covers a broad sweep of things, preventative care, doctor visits, hospitalizations, prescriptions, the whole shebang. But on the other hand, we have these fixed indemnity plans, sometimes called hospital indemnity insurance. These completely bypass that risk pooling model. Instead, they're designed as supplemental coverage that simply pays out a predetermined fixed cash amount for specific medical events. They don't actually cover the underlying cost of your medical bills. Now, I have to admit, the marketing pitch for these indemnity plans is absolutely brilliant. The monthly premiums are ridiculously low, and there are absolutely no complex deductibles to track. Plus, here's the real kicker. The cash is paid directly to you. You can use it literally however you want. Pay the hospital, cover your rent, buy groceries while you're out of work. It's totally up to you. You might get a direct cash payout of, say, $100 for a hospital stay or $50 for a doctor's visit, and there are zero network restrictions. You can go to any provider. So if you're relatively healthy and you hardly ever go to the doctor, it's so easy to see why this pitch works like a charm. It sounds like a fantastic zero-hassle deal, but unfortunately, it's fundamentally an illusion. And that leads us directly into our next section, the catch. Here is where we really need to pull back the curtain, because digging just a little deeper reveals some truly terrifying limitations hidden right behind that slick marketing. So here is the crucial catch you need to know. Health indemnity plans are absolutely not comprehensive health insurance. They are not considered minimum essential coverage under the ACA. Let's translate that jargon for a second. Minimum essential coverage is a legal standard that literally requires a plan to cover the big, life-altering stuff, emergencies, maternity care, massive hospitalizations without arbitrary dollar limits. Because indemnity plans are classified as supplemental, they are totally exempt from those consumer protection rules. It's an entirely different financial product that is just masked to look like the real deal. $10,000. I mean, that sounds like a pretty decent chunk of change, right? But here's the trap. These fixed indemnity plans often impose aggressively low annual caps, which limits your total benefits to maybe just $10,000 or $20,000 for the entire year. Now, sure, if you're just popping in for a basic checkup, you'll never notice that cap. But in the world of modern healthcare, wow, a quick trip to the emergency room for a broken arm or a minor appendectomy can eat through a $10,000 limit in the blink of an eye. Let's talk about the true cost of care and how this builds into a very dangerous mathematical reality when you actually get sick. Let's put this into a real-world scenario. Imagine the unthinkable happens. If you face a major surgery or get a sudden cancer diagnosis, your bills aren't going to be just a few $100s. They are going to rapidly skyrocket into the hundreds of thousands. Say you get hit with a massive $150,000 hospital bill. Well, your fixed indemnity plan is only going to pay out a tiny fraction of that, maybe a couple $1,000 based on their strictly capped daily rate. And after that, the plan just stops paying. that giant six-figure unpaid balance falls 100% on your shoulders. This is exactly the devastating mathematical reality that pushes so many families straight into severe medical debt and bankruptcy. And to make matters significantly worse, we really have to talk about what's completely excluded from these policies. Got a pre-existing condition? Yeah, it's likely not covered. Need a basic routine checkup or preventative care? Excluded. Mental health services? Excluded. The core issue here is how aggressive and honestly sometimes unscrupulous marketers pitch these plans. They'll use fear-mongering about rising ACA premiums to deliberately blur the lines between a simple supplemental add-on and actual primary coverage. They are tricking unsuspecting buyers into dropping their real, compliant insurance for what essentially amounts to a glorified coupon book. Moving on to the ethical choice. Let's view this whole situation through the lens of an industry insider who spent over 2 decades navigating this exact system for families. This brings us to Eric Burns. He's a veteran, licensed insurance agent with over 20 years of experience, operating across a massive footprint. We're talking from Texas and Florida all the way up to Ohio and Virginia. Because he works across so many different markets, he has seen firsthand exactly how these products perform out in the real world. And from his perspective, a good agent's role is to advocate for a client's long-term well-being. It's all about protecting vulnerable populations, like low-income families or those managing chronic conditions, and making sure they aren't sold a product that prioritizes short-term corporate profits over genuine, lasting financial protection. Eric's stance on this is completely absolute. He says, quote, "I do not sell health indemnity plans, period." This deliberate choice comes straight from having seen way too many horror stories in the industry. He's seen families who genuinely thought they were fully covered, only to face completely ruinous medical debt because their so-called plan paid an absolute pittance during a health crisis. Look, for an experienced agent, representing these products often means getting a much higher commission check, but it also means participating in a system that leaves clients incredibly vulnerable when they need help the absolute most. Refusing to sell them is his direct response to that dynamic. So let's look at safer coverage alternatives. Since we've exposed the trap and the real mathematical dangers here, let's pivot to the solutions and explore the transparent options that actually shield you from financial ruin. If you're looking for real protection, there is a clear path forward focused on comprehensive, transparent options. We're talking about ACA marketplace plans, employer-sponsored insurance, proper catastrophic medical coverage, and Medicare. These alternatives actually work because they're highly regulated and they rely on that risk pooling structure we talked about earlier. They don't have lifetime maximum payouts, and they actually cover pre-existing conditions. When you face a real medical crisis, these are the plans that are legally bound to step up and cover those massive six-figure bills. That is what provides actual peace of mind, knowing that a sudden, unexpected illness isn't going to cost you your home or your entire life savings. So I want to leave you with this provocative thought. Does your current plan truly have your back, or is it just a fixed payout? Take 10 minutes today, go pull out your policy documents, read the fine print. Are you actually protected against the worst-case scenario, or have you been sold a fixed payout illusion? Because at the end of the day, your health, your family's financial future, and your peace of mind absolutely deserve real protection. Thanks for joining me for this explainer, and remember to always look right past the marketing to find coverage that truly has your back.